My name is Jamin Goecker. I'm an associate real estate broker in the state of Alaska, and my mission is to help you to build an intentional and significant legacy for yourself and your family by coaching you in real estate. And today, we're going to be talking about what's going on in Anchorage, Alaska, which for those of you who follow real estate in Alaska, you'll know that is the largest real estate market in the entire state. And we'll be talking about the residential, the condo, and the multifamily market and what this means to you if you are a buyer, seller, or an investor. Before we get started though, as always, make sure you give this video a like, subscribe, do all the good stuff, and let's go ahead and jump into today's video. Now, the first thing we're going to look at is what's going on in the residential market. And in the residential market, not a whole lot of inventory right at the moment. To give you an example, this time last year, there was approximately 382 homes, and now we're sitting at about 230. That's right. So we've seen about approximately 150 properties less on the market than what we saw this time last year. And this really is in keeping with what we're kind of experiencing on the ground anecdotally. There's just not as many options as there usually is this time of year. And this is usually the time of year everyone is ready to hot to trot and ready to go. And this really is in keeping with what we've seen really for the entire year, though, because we've seen really record lows going all the way from April up to the current times where it's actually less compared to what we saw this time last year. Now, we did see some very moderate upticks by like maybe 20, 30, maybe 50 properties, higher, more available in the market than what we saw this time last year in those first quarter, in the first 3 months. And that kind of just went right away. So the bottom line right at the moment, we are seeing less properties on the market than we have ever seen this time of year. Now, the next thing we see is that the number of properties that actually sold, not surprisingly, took a bit of a decrease as well. This time last year in June, we saw about 316 properties sell. This year is about 250. Not surprisingly, you get that big of a cut, it's not that big of a surprise. Now, what is surprising is even with the market compressing that much, that we're still seeing so many sales happening. Okay, I would actually, if everything was just proportionally rationed out, I would expect to see less homes selling in correlation to the number of less homes available on the market. But, there is less sales. It's not in proportion to the decrease that we've seen for the homes that are available. So take that as a bright spot, I guess, if you would like. Finally, on the residential side, we see that this time last year, the year-to-date price was about $457,000, and now that price is $474,000. Not surprisingly, we're actually seeing a 7.7% increase year over year for what we had about this time last year. And that's not that big of a surprise. I know the interest rates have gone up and everyone is losing their minds saying, well, that means the price has to come down. It has to come down. No, it does not. Because what really trumps all of the theories about what the market's going to do and how it's going to respond to interest rates is simple supply and demand. And right at the moment, there is hardly any supply out there, and the demand is still higher than what the supply is. So for that reason, we're still seeing those prices going up. But we'll talk more about what that means for you as a buyer, investor, all that good stuff in the summary, though. All right, let's get a bit of a pick-me-up real quick. Let's go talk about the condo market. Well, not much of a pick-me-up there. So this time last year, there were 118 homes available on the market, and this year it's 59. That's exactly half of what we had this time last year. And it's been a pretty tight clustering for the overall inventory in Anchorage. It's actually has gone anywhere from about 48 condos up to where it is currently for the month of June of 59. So not seeing that big of a swing really, just month to month, but year over year, we're seeing a pretty precipitous drop. And a big reason for that is, people have kind of their more affordable housing just with interest rates going up. And a lot of buyers are saying, man, forget this. I'm tired of trying to find some kind of a residential home. I'm just going to find condos. And it makes those who currently have condos just hold on to them really as tight as they can because they know that's a pretty affordable option for them. So that's really the reason that we're seeing the sudden dip in inventory for condos. Because before, you couldn't get rid of them fast enough. People really didn't want condos in Anchorage, and that's kind of done a 180 on itself. Now, the next thing we see is that the total number of condos that actually sold in Anchorage went from about 150 this time last year to 100 this year. So pretty precipitous drop. Not that big of a surprise, though, because you can only you can buy more than what's available on the market, and there's just not a whole lot that's available on the market right now at all. And kind of the same thing on the residential side. If anything, I'm kind of surprised that we're even have that number of units that are actually selling, just because the drop in inventory did go so low. So I'm kind of impressed that is even where it's at, considering the fact that we haven't had more than 40 or 50 condos on the market at any one time for the entire year. Now, finally, what we see on the average sold price is it went from about $244,000 this time last year to about $265,000 this year for condos, which means we've seen approximately 8 to 9% increase for the average sold price. This isn't that big of a surprise, just because we do know that as the interest rates do go up, this is one of those instances where we do see a direct impact in the market with the interest rates going up. Once those interest rates do go up, then we see everyone that is trying to crowd into that more affordable space, and that creates more demand, and simultaneously the supply is going lower, which means the price is going to go up. And that's really what we see playing out here. I don't really see this changing anytime soon. Let's go ahead and take a break here real quick. So as a lot of you do know, we do have the podcast called the Alaskan Journey Podcast, where we interview people who've recently moved up here about their experiences and tips and tricks they have. Go check it out. But today, really what I want to tell you about is we are actually going to be hosting some monthly meetups for people who are currently living up here in Alaska. We're going to have a link in the description section down below where you can go check that out and see what we're going to be doing for the month that we are currently in. And if you're wanting to jump in and join us, you're more than welcome to. It's primarily going to be people who are just moved up here just like yourself. So if you're just looking for a way to kind of plug into a community, that's going to be a great place to do it. So feel free to go check that out. Whether you are looking for a home or you're renting, whatever, if you're just moving up here to Alaska, you're more than welcome. Now, let's go and finish up talking about multifamily. Multifamily is pretty much what it was this time last year, and that's kind of unique that we're starting to see kind of a leveling out of what we see from the year before, really in any of the asset classes. This time last year, there were 69 multifamily properties available in Anchorage. This year, it's 64, and we've seen that's definitely. We're seeing an uptick in the inventory that's available in multifamily in Anchorage. It was at its lowest in February, about 33. Now we're up to 64. So that's kind of a promising development. If you're looking to jump into an investment, that you are starting to see more options that are available. I would be very interested as to why the inventory is ticking up like that. This is a time of inflation, so rents are going to be higher. So it makes more sense in my mind that you'd want to hold on to those investment properties right now. But I mean, to each their own. Now, the next thing we're going to look at is the number of multifamily properties that have actually sold. This time last year, it was 43, and this year it's 20. Not a big surprise, just because the interest rate does have such a direct impact to how profitable that property is, and how motivated investors are going to be to jump into the market. So for those of you who are kind of waiting on the fence for the market to collapse, well, for a couple of years at this point, it's not the best spot to be in, where now you're trying to jump in and trying to invest when you're just not seeing those interest rates come down in a significant way anytime in the near future. But that's kind of what I suspect is driving the decrease of the properties that are actually closing. Now, the next thing we see is the average sold price actually went from about $509,000 to about $491,000. So we do actually see a decrease of approximately 3.5% for the average sold price year to date for multifamily. I'm not sure how seriously or how much credence I'm going to give these specific numbers. And the reason is the multifamily includes everything from the duplex all the way up to the big commercial property for apartments. So it really does include quite a bit. So it's hard to extrapolate any usable information from there. I would expect to see the value for the multifamily properties probably staying pretty steady, all things even. Even if we were just looking at duplexes, comparing a duplex to a duplex or a fourplex to a fourplex, I suspect we're still probably going to see those values going up, just because this is a time of inflation, which means values of rents are going to be going up, which makes those properties more valuable. But also, interest rates are also going up, and that makes the demand for these properties go down. Now, let's do the summary now. What does all this mean? Well, if you are a buyer, not all is lost. So let's not get too scared here and just throw in the towel and just decide we're done. But know that it's probably going to be competitive, and those awesome interest rates we had a couple of years ago, you're probably not going to be seeing those anytime soon. What I would recommend is jump in as soon as you can, get something locked in so that there's no chance of your rent at least going up every month. The mortgage is going to stay the same for the next 30 years. So that's not going to go up. That's why homeowners usually are going to do very well during a time of inflation, because their biggest line item expense, their house, is not going to be increasing. So that's great. Get that locked in. And then if interest rates do come down, then you can go ahead and just refinance at that point and get the lower interest amount. If you're a seller, there's really not a whole lot of bad news here for you. The demand is less than what it was a couple of years ago just because interest rates are lower, but what's available is just so much lower than what it was a couple of years ago. We still do see a disproportionate demand in relation to the supply that's out there. And really what's driving this is everyone got a great interest rate a couple of years ago, and with that being the case, who in their right mind would want to go sell a property for like 2.7% to go buy something for about 6.5%, 7%, whatever the interest rate is at the moment. So that's really what's keeping the inventory so low. And it's going to take us a couple of years before the necessary, like all the necessity moves where people have to move, has had a chance to kind of cycle through. And that's kind of broken that dam there. So that's going to take a number of years to actually work through it, if it ever does. So there's kind of a certain part of the real estate market that's going to remain locked up for quite a while. If you're an investor, you just have to be smart out here and make sure that you're running all your numbers and make sure that you're giving yourself a big margin, because those interest rates are something else. And it would have been better to have bought a couple of years ago if you possibly could. But this is the situation we find ourselves in now. And just make sure you run all your numbers, pick the good area, all that good stuff. Now, that's all I got. So thanks for watching. If you have questions, feel free to reach out to me, and we'll see you next time.